Regina Kengori. I'm a director at RWK and Associates. It's a registered audit firm, and I'm also a tax expert. We offer audit services, tax services, and advisory services. Particularly, we specialize on tax. So there are different entities that you can use to start your business. I'll name three that are commonly used. There's a sole proprietor, that you come in as you yourself, person doing the business. There's a partnership, where you come together with other people and form a business. And then there's a company, limited company, that you register that company. You have directors and you register a limited company. Sole proprietor, you can register as a business name. It's cheapest. Sometimes you may start a business, you have minimal cost. Registration is very small, so you just register your business name and you start doing business. For partnership, sometimes you may want to have partners because you want more capital, or you want more expertise, or there are different ideas of why you'd want to have partners. So partnership, you come together and register a partnership. A limited company, you may have also come together and form directors of a company and register as a limited company. So this also requires some documentation to do the registration. Could be a bit expensive to do the registration, but the good side with a limited company is that it's a legal entity. So that entity has its own PIN, it has its own regulations. So you can operate that business independently. But for partnership, even if it has a PIN or its own PIN, you as a partner, you're liable in case of anything when it comes to you doing the business. So first, you have to identify the business that you want to do. Have a business name, proposed business name. So when you go to eCitizen, you're required to have about 5 names. They review the names and pick the one that is not owned by somebody else. There is also documentation that you're supposed to provide. They will ask you for the passport, ID, sometimes the PIN, also the PIN of the directors, location of the business. They have a list of requirements that you're supposed to do that. Then after that, after some few days, then you get your certifications. You can also do this yourself. Right now, opening a business, even if it is a limited company, is not hard. You can do it yourself, or you can go to a cyber and do the documentation, or you can even approach a lawyer. We used to really approach the lawyers to do it, but nowadays it's a bit easier to do it, and you do the application. When you're doing a business name, that one you just do give the names that you'd want. I guess you pay less than 1,000, then you get your name. And that business name you can also operate for some time. When now the business has grown and you want now to graduate to a limited company, you now graduate that business name to become a limited company. When you want to obtain permits and licenses, depends also on the business that you're doing, because different businesses require different permits. So if you're doing food industry, there's a lot of licenses required. Good health, public health, even for employees, sometimes they'll be required to have the health, the medication certificates. So depending on the business that you want to do, you can apply for the licenses. So check when you're doing this business, what is the requirement. If you're doing a hotel, there are so many. You'll be required to do the levies, the licenses for the music. If you're going to have, the staff need to have the medical certificates, public health. So, and then there's the city council licenses, depending on the nature of the business. There are businesses that require even to have fire certification, others require NEMA, other sound. Depending on the nature of the business that you're doing, you can check the licenses. It's easier to apply. You just have your certificate of incorporation or your business name, and then there are licenses, the application forms that you're supposed to apply, and then you just follow up and get your licenses. So also tax obligations are different on the nature of the business that you want to do. So the common one is corporation tax. Because you're doing a business, at the end of the day, the expectation is that you're going to have profits that you're going to get out of that business. So corporation tax, that is tax 30%. So you'll be required to do your profit and loss, have your incomes, your expenses. At the end of it all, there's a profit that you've received. That net profit you multiply by 30% and pay corporation tax. So VAT, that is value added tax, happens on the nature of the business that you're doing. So if you're doing a vertible business, you'll be required to have the VAT obligation. And if you're doing those turnovers above 5 million, you can do the VAT obligation. There's the payee if you're going to have staff. And you as a director, you're also a staff, you're the primary employee. So pay as you earn for the employees, you remit to carry every month. We have rental taxes, we have withholding taxes. Depending if you're having professionals who are coming to the organization, you'll be required to do withholding tax. So taxes are there, the common ones. Corporation tax, VAT, and pay as you earn. So if you're also having staff, you'll be required to do NHIF, NSSF. There's also NITA. We have now the housing levy that has. So there's a lot. So depending on what business you're doing, then we can have that conversation on which taxes that you're supposed to be compliant with. The biggest compliance is tax compliance, and what I've said before, the biggest area that any business can improve is on bookkeeping. So when you're able to maintain your books properly, then compliance is not a big issue, because you having your reports done very well, you're having an accounting software that you're updating every day. So even compliance is easier. Even if you call us to help you out, it's very easy to do even tax computations. If you want to acquire a loan, first of all, is to identify where you want to get a loan. There are so many service providers when it comes to financial, the loans. So we have microfinances, we have SACCOs, we have the bank, we have Shylocks, we have Fuliza, and the mobile apps that you're having. What is the requirement of that loan? Is it for working capital? Is it to buy an asset? So first understanding why you need that loan. Then when it comes to credibility, it's your ability to pay. So any organization will look at your ability to pay. Even the apps that you use, there's the demographics they use to understand that we are going to give you 5,000 and not 10,000. So they look at how you spend your money, they look at how you purchase, and they are able to do that calculation to know if we give you 5,000, you can be able to repay. But when it comes to the bank, they look at your sources of income, they look at your bank statement, They look, if you've previously been given a loan and you've been able to service it on time, they look at that. They also look at CRB. Are you there? Do you pay your loans? The CRB has a history of all the loans that you have acquired and how you paid them. So they will find that at one point you are not able to pay, and then the signal and everything. So all that combined, they can see if you're able to get a loan in payment. The documentation that would mostly be required for you to get a loan are bank statements, mostly for them to see, or M-Pesa statement for them to see how much money you receive. So if you want a loan for 50,000, they want to see how much money do you get in a month, and so that you can be able to get your 50,000, be able to repay it on time. They will also ask you for if it is a company, your certificate of incorporation, your PIN, your location. Sometimes they may ask you for your business permit, tax compliance. If you've been compliant with the loans, with the taxes, they'll ask you for tax compliance. If you use getting a loan that is having collateral or a security, they will ask you for the documentation. If it is land or it is the car, they ask you for the logbook or the title deed. So those documentation will be required. And then they can also give you forms where you can fill. They will require your signatures. If you have a partner or if you have another director, the partner must sign. They should be aware. The other loans that require you to have guarantors. So they also guarantors require them to sign that they guarantee you in case of an issue. What I can say, the different loans there are so many loans. So short-term, long-term, asset loans, education, anything that you'd want to get, you can receive as a loan. So what do you want to do with that money? When it comes to short-term, there's something that you want to do in the short term. You want to buy something and then supply and then get paid, then you pay your loan back. And short terms are a bit cheaper. When it comes to long term, you want a mortgage, you want to build something, you want to get, you want to improve your working capital. So depending on what you want to do, you can get a design of a loan of what you want to do. But check the interest rates. You can also check different suppliers. There are so many organizations in the market, and even so many, wherever if you're looking it for the loan at the bank, you can get you can request this bank to give their interest rates, their requirements. Then you go to the next one, then the other, before you make the decision. So don't just stick to one. You can shop around and make sure that you get something that is workable for you. Also, sometimes when we go to get loans, we are really pressed. So you have a really need. So sometimes you don't even check the requirement. You don't check the terms and conditions. You don't check them. You just sign because you really wanted to get a loan. You're pressed. So sometimes you may find that you signed to something that was so expensive for you. So don't get a loan when there's an urgency. Try to solve your issues. If you wanted to grow your business, just try to grow it gradually as you plan. So if I want a loan in January, you can start planning, and so that by the time you're getting that money, first you even know where you're going to take that money. So that money is for great use, so that you don't have repayment issues. There are so many that are out there. We have the Hustler Fund, but also there are so many others. There's Youth Fund, Women Fund. It's just understanding and being aware of a fund that is available and you doing the applications. Also, I find people who come together in circles or come together as as they able to join hands and become as a group. Mostly the government loans are given in groups. So if you're going for youth fund, you have something that you're working on as a group, and then you can go and apply. So they are there. Government gives those opportunities so that they can enhance businesses. Prior to you getting the loan, make sure that you understand the repayment period, the interest rates, and how you're going to cover that cost on your business. So for instance, you want to get 100,000 to do something in your business. So first of all, have you tried to save or to look for money any other way? So if you're doing your business, and have you done your calculations well to see every month my business is making 10,000, it's making 20,000. So when I get a loan of 100,000 and I'm required to pay 5,000 per month, will it be able to give me that money? So first, understanding your business, understanding the profits within your organization is the first step. Then understanding when I get the loan, will I be able to now repay? What is the repayment period? Can I also request for a grace period, 3 months, to be able to start repayment? And what are the interest rates? And what if I default? We don't think that you're going to default, but make sure you also understand. If I default, what are the penalties, and what will be the end result? Sometimes you may find that out of a loan, you end up losing the business, you lost an asset because you're not able to repay the loan on time. So especially for SMEs, if you can be able to save, if you can be able to grow the business, plow back the profits to get to a point where when you get a loan, it will put your business, it will boost your business to the next level. There is a risk of you losing the business if you're not able to repay on time. Sometimes some of the organization that we get loans, like the mobile apps, which are very expensive, the Shylock, who are extremely expensive, you may find that at the end of the day you actually lost that business because you can't be able to repay those interests. So prior to you asking for that money, know what you want to do with the fund. Sometimes we divert. By the time you get hold of that money that was supposed to be working capital, it comes to pay school fees, buy other things within the house. So even the work that money was supposed to do, it did not even do. It was supposed to multiply your business, but did not do. So even having financial literacy, nowadays there's a lot of information out there. Learn on webinars, learn on YouTube, financial literacy. Learn how to manage loans, how to manage your debts, how to run your business with no debts, with no loans. Learn something. When you learn, it will help you. That when you get that money, you can be able to use the money wisely. Understand the terms and conditions. When you're signing those forms, there are terms and conditions. Have that conversation with your credit manager and ask as many questions as possible. So, and know the interest rates, know when you default what will happen, understand everything. So even understand, ask them, in fact, when I default, at what time will you sell my property? I've given you my collateral, I've given you my security. At what particular point or at what event will you actually sell this property? Are there room for restructuring of the loans? Have that conversation. Don't be in a rush. Don't take that loan in a rush. Make sure that you ask as many questions as possible. When you're unable to pay the loans on time, first, CRB, the bank or the lending organization puts you at CRB. So in future you'll be having issues with your repayment, with you acquiring a loan. So anything that, and your credit history, any loan that you've been able to get service, that credit worthiness, you lose that credit worthiness, you lose. And nowadays, because of that sharing of information, you can't pick a loan here, default, then go pick another one. No, there's now the CRP that is able to communicate that this person is not credit worthy. Then what I can say about loans, they can really stress you up if you're not able to pay on time. So even if you not be at CRB, but that pressure of you just being under pressure to pay a loan, having the phone calls, having somebody who is coming to look for you, threatening you that they're going to sell your property, is also not good for you, for your health and for your business. This has been Regina Kengori, LWK and Associates, CPA-K. Keep watching Creative TV, and this is my Source Business Show.